Hello guys, it is Sunday, 6 p.m. Sunday the 5th of August, and I have an opportunity. I've got a gap in my day, so I thought I would do a quick market review and cover a few things. Let's do something here quickly. Right, so there's a couple of things I want to do. First of all is two things. You'll notice that as I review the week, I will look for news announcements, especially if I start to see correlations between the key major pairs. If I see that the Aussie and the Yen and the Swissy, obviously the Swissy is tied to the Euro, and cable are all acting similarly, then there's often a correlation between them and the US dollar. So often I'll be looking for US dollar news that they're probably waiting for, which is why they're correlated. So if you're not aware of this, often when in anything, you'll find there's a lot of correlation between the markets and the currencies with each other under times of stress, under times of duress. Whereas when times are good, they just do their own thing. So at the moment, everything is highly correlated and very sensitive towards other currency pairs because of the kind of stress that's been going through. And I mean, it's been going on for about a year and a bit. So, hopefully it doesn't drag on forever. But we might just be in one of those kind of 7 years of famine and 7 years of feast sort of scenarios. Who knows? Maybe that's what the story is. So we're using Forex Factory to just kind of give us an indication of what news is up ahead. So I'll be focusing predominantly on US and Euro news. We had non-farm payroll on Friday. You will also be noticing that you get good news, but then the currency drops, and there's no real sense to what's happening, and it doesn't have to make sense. It's been heavily manipulated in many cases to keep the mood buoyant, to keep everyone optimistic, and for various other reasons to keep economies going. So there's real valid reasons, and then of course there's just agendas. So that's much. It's happening a lot more because things are really serious at the moment. So this is Forex Factory, which I love to use for the calendar to look ahead this week to see what's happening. It's really not so relevant if you're trading end of day. It's more relevant if you're trading pivots and snipers and intraday stuff, because a spike of 20 or 30 or 40 or 50 pips can hit your stop. So if anything less than that, it's not too much of a concern. The next site that I really do recommend is Forex Live. Predominantly, I really don't want to recommend to people to get obsessed with the news right now, because there's so much crap out there that you'll get stuck on something that just isn't relevant. So I really don't recommend it. And there's just non-farm payroll is a big one because it can move the market, 100 pips or something like that. And at what's happening at the moment with these big. More with the FOMC, the big announcements with ECB, big people speaking, that's the kind of thing that can move the market more so than other stuff. But Forex Live is just a great site when something happens that you just don't understand what just happened. This is the best site to come to look at and see what those explanations are. So these guys just make comments throughout the day, sometimes nothing for an hour, and then sometimes 10 in an hour. So, but it's great explanations for what's happened. So it's really nice to get that opinion, especially if you're trading on your own and you're not really getting, you can't really discuss it with anyone else. Right. Now that we've done that, so those two are the best sites for that. Let's go and have a look. I had someone ask me a question about how do I draw in my horizontal lines, and so I'm going to quickly demonstrate that just for anyone else who's interested in the way that I do it. I prefer to use candles. I take away my moving averages because psychologically I'm always biased by other things in my chart, so other things distract me, and then if the moving averages are trending down or something, I find that I don't see the price levels clearly. So I start with a clear chart and I check my weekly and my daily. You can go to your monthly as well. Let's look at the euro for now. And to keep my chart really nice and simple, I'll focus on the current bar, which is around here, and then look at putting my immediate floor and ceiling above that, and then the next channel and the next channel above that, and then I might just check the daily to see if there's anything else going on. So in this case, let's go to the monthly. So hit comma M, go to the monthly chart, and let's pay attention to levels that we're close to now. I will look. So the way that I prefer to do it is I'll look for levels where a wick or a body has connected, and here's the explanation for me. Price in reality hit that point and turned around. Whether it did it in a day or a week is irrelevant to me. The fact is it hit that price and changed direction. And I can see that in the past, prices actually reacted around that level anyway. So for me, that's a substantial level. It's also been touched from underneath. So this is both support and resistance. And occasionally you'll get a little area like this where there's a bit of fuzz there and there. And that's perfectly acceptable, because that then means that potentially there's another level close to that. It's not always the case. It happens occasionally, and there it is, and it's worth paying attention to. So I can see that that kind of thing has happened, and you know, in that respect, I'll leave it that way. But yes, absolutely, I prefer to look for areas where I can see the greatest confluence between levels that touch both the bodies and the wicks. And if it cuts through and it connects with price action coming from underneath as well, that gives me the most secure kind of areas. So then I'll be looking for areas around where we are at the moment. First I might start by getting to the most obvious levels, which is something like this, which I can see prices kind of touch there. It's cutting through here, and I can see that there's been a reaction here, and it's touched there. So for me, this is that's a particularly good level. Dropping down below that, there appears to be another level sort of approximately here. I like that because the body's cut through here, there's the wicks, and the body is kind of cutting through that, and prices kind of reacted off that. So for me, that's pretty much acceptable. I know that once I go down to the daily and the weekly, I'll get a lot more detail. But you can see I'm keeping the chart sort of clear of clutter. There's no point in putting levels in that you're not going to touch, because your brain is, you have your unconscious brain is storing a lot of information, and if you want to trade in an uncluttered fashion, you need to keep your desktop, which is your charts, you need to keep that as clear as possible. Well, that just makes the most sense. So now that I go down to the weekly, I can see that there is some reaction to those levels. So that is supported. That is supported in many ways to what we see. And of course, there's some fuzz as well. Like in this particular period of time, that level was not respected over there. But that's not relevant for what we're doing right now. I'm going to be paying the most attention to areas, but this is the way it's going to go. If price breaks below here, the next level that it's going to look at is the previous time that it was there and in the past. So that'll be this level here, which has been touched over there. And once it breaks through that, the next thing it's going to look at is this level here. And then once it breaks through that, it's going to be looking at that level there. Once it breaks through that, then the gaps start to widen, and then it starts to move down to this level, down to here, down to here. So I'll deal with that when I get to it. The only other thing that I see of interest here, and I'm going to put a line in and see if it connects with anything else. I'm going to look at this level because I see there's two wicks there, and there's a wick connection there. So for me, that's sufficient for me right now. Before I even look at our current, where we are right now, that's sufficient for me to suggest that this is a level I should be paying attention to. And of course, here we go. I can see that it's been kind of in that area, and I see it's been touched over here. So for me, that is a significant level. And if I look over here, I can kind of see we're sitting around that area. But beyond that, it starts getting really fuzzy. Now, and of course, you can get fuzzy, you can get clear. If I was to go and put something else over here, I see there's some reaction there on bars there. I see there's a reaction there, and I kind of see we're there now. So what that means to me, what that tells me is, I would not certainly have said that was the most significant price level at this point in time. I can see it's been touched a few times, but it's not super, you would not think it was. And yet right now, whatever's going on at the moment, it appears to be significant. Therefore, I will pay attention to it. Okay, so I think I've got more than enough lines in here, really. My next priority is just going to be looking at, is this trend of downward, of lower lows and lower highs going to continue? And as long as it does that, we're on the weekly chart right now, so as long as this does this, we are still in a downtrend. The second we break this high is when we are in an uptrend. And the way that I analyze that is, there are degrees of trend lines here. There's degrees, I beg up trend lines that I can put into the scene. So I could put something in like this, then I can put something in from here to there, and then of course I can put something from there to there. So this is how, because people are kind of like, well, I don't know which trend line is the correct trend line, and approach trend lines more from the point of view that they will just give you an edge as to where price action is kind of, if it's starting to break that trend line. And it has to make sense. I mean, up until this bar on Friday, last week, we were actually well within this one. So now that we've broken this, let's call it a macro trend. You have these trends within a trend within a trend. So I'm using these to give me to help gauge how far price is likely to pull back, and I would say we've broken that trend line. But you have to be strict. I think once you've given it as much room as you can, if price action then nudges past it, that's it. Then it's no longer relevant. Then what's likely to happen is it's likely to go on to test the next level. So based on what I've just drawn through here, just based on price action alone, I'm inclined to believe this is going to break up. I'm inclined to think it's probably going to pull back further up to this level at the very least. You'll notice that then if it breaks this high, this downward trend of lower lows and lower highs is broken. So once this gets broken, we are now in an uptrend on the weekly, and that's pretty interesting. Once I bring on my moving averages, what we're really looking for is we want to see which moving averages of our 10, 20, and 50 are going to be coinciding with these trend lines. We want to see what's going to coincide with these trend lines. So if I find, because remember that if you have a confluence of factors, if you have a support resistance level combined with a trend line, combined with a moving average, then there's a greater likelihood that other traders are going to see that as well, and you'll get sellers stepping into the market at those points. They might lose the battle, but that's definitely where they're going to be stepping in. And so that gives you that opportunity to find out where price is going to be turning around. So we'll take the 10, the 20, and the 50, and we'll look and see, and you'll see here that we have the 50s kind of close enough to this line, 20s between these two levels, and here's the 10 on the weekly. Let's go to the daily and you'll see what I mean by this. This is now a different thing. So we look at the daily charts, and now you can kind of see how we've broken through the 10, broken through the 20, we're coming up to the 50, which is on this level. So yes, on the daily, in the past, we've bounced off the 50. So there is absolutely a possibility, to be fair, that we could bounce off the 50 here and reverse, but I'm kind of not entirely convinced of that, just because of these two. This bar here is a dud. It's eSignal's data. I'm not sure where that's coming from, but this is a dud. This is actually Friday's bar, and this is Sunday now. This bar does not actually exist right now, so we're sitting more or less here. But the reality is, once the euro we have a high test here, and it's not really a good sign because it's not at the top of a cycle, and it's not at the bottom of a cycle. So it's sitting right in the middle of sideways action. You have this high test. And that's more a sign of indecision than anything else. And we all, if you were around the market last week, you'll remember that was just Draghi speaking, messing with the market. And then, of course, we have an incredibly bullish Friday. So this implies that this bar has been disregarded. Because if this was a real high test bar, then what would have happened the next day, statistically, based on historical behavior, is the next bar would have just gone the other way. That would have been a rejection of that level, and this has completely disregarded it. So this bar doesn't exist right now, so this is actually what we're looking at. And so this implies bullish behavior. Plus we've broken out of this trend line, this very strong trend line. We've busted just beyond it, which is enough for me. We closed above it. So I'm inclined to think we're going to go further. We're going to go up further. The question is how much further. Let's bring on the 200, which I hardly ever use, and see if that coincides. Well, and then there's the 100, and you cannot discount the 100 either. So what I'm actually going to do is, first of all, is actually switch the 200 to a 100 moving average. People underestimate how often the 100 is used, but it is often used. Okay, so we have this level, and this is going to coincide with this level. So probably what will happen is we'll break up and then come up to this level. It's really only if we break this level that I get concerned. Otherwise, we are technically still in a pullback until we break this one, and then at that point we're probably in a change in trend. Of course, you can still get a pullback on the weekly, but it's not a good sign. If we break that, we could actually be on our way up to another level. So, so I'd be watching that hourly chart and the 4-hourly chart to see higher highs and higher lows. In terms of just supporting the idea that this has still got a way up to go. And I'll be watching it as it heads up to this level. I think this trend line is now broken, and I'm inclined to think that price is going to head to the next level, which is going to be somewhere here, either coincide with that 100 moving average, and then start to carry on down. I'm more of a technical analyst, and I see there's more of a possibility here. I can't see the euro really climbing, but as I've said before in my other stuff, if we look at the weekly chart, we've seen in the past how the euro is perfectly capable of getting to a level here and then just reversing and climbing, and then getting and reversing and climbing. So we may well be getting that. So I'm just going to be watching it. I certainly think right now it's definitely more bullish than bearish, and unless we get some bizarre reversal tomorrow, I'm starting to lean more towards it, this pullback continuing a bit further. And it's a pity, because if I look at the US dollar, so I think that's answered the question of how I draw those lines in, and what I'm doing with my moving averages, and I'm looking how I've kind of seeing how price has broken through the one, it'll probably go to the next, and if it breaks through that, it'll go to the next, and I'll be watching my different time frames to trade that, so that between those levels I kind of have that. And it's going to get a little bit messy while it jumps between these support resistance levels. But yeah, so let's go and have a look at the, let's go back to the other chart and kind of jump. We'll go and do a general overview. And again, this is the wrong data. This is like a glitch. It's like a double bar, so please just disregard that. But this bar is looking pretty good. Let's go have a look at the US dollar, the dollar index, just to see how that's performing against everything. On the daily, we still seem to be sitting currently, we're still bullish. We've just broken to a new high. So from there to there, we broke to this high, then we pull back and we broke another high. So I still think that's bullish. I think that people just took profits. It's come back here. My only concern is, yes, it has moved down and closed below the moving average, which is interesting to see if that's going to pull back down to this level. Which it may well do, but not really a good sign if it does do that, because we've already been at this level. We broke through, we came back, we've kind of come back, and we should be moving on from that. So not really a good sign. I'll be watching to see if that happens. But again, this supports it. If this is going to pull back, that is going to strengthen the euro. So that does support that idea. Let's go look at cable. Cable ranging sideways, lovely, and not so lovely. It's a horrible one to trade. So for you guys who believe you should be trading the majors, I hope you have some skill trading it, because it's incredibly choppy, and it's not a great chart to trade. So let's take off those, no, let's leave the moving averages on, it seems fine. So price is kind of jumping between this. Anyway, you know, people are asking me what's my view on candles versus bars. I use the candles predominantly to read price action and to get those horizontal levels in. And then when I switch to bars like this as opposed to candles, it's really just to check my highs and lows, but not to draw in those lines. For some reason, I cannot see these levels when it comes to the bars. I prefer candles. So yeah, this is ranging, and yeah, this is going to do this. The only thing that's going to break out of this would be if US dollar got really good news and it really forced cable down. It would have to be something extremely good, and it would have to break this level before it would trigger enough shorts to go that way. Alternatively, there'd have to be some really bad news out of the UK to break below this level. So there's just buyers coming back into the market and buyers coming back into the market. So my advice would be, unless you know what you're doing, stay away from cable for now. The Swissy is tied to the euro, which means that it's effectively an inverse mirror of what you see the euro doing. So you can trade both, or you can trade either. Your success rate is going to be the same regardless. So if you see a good setup on euro, consider putting another 0.5% on trading Swissy in the opposite direction. Really, you know, if you're a master trader, I'd go for it. We have agreement here in terms of stochastics. It's the only indicator I currently use, but we have agreement in that. So there's no real divergence at this point, so it's still bearish. So that's also kind of indicating to us it's potentially going to pull back. And again, there's some similarity here between this and the US dollar. So not identical, but it is an exact mirror of the euro. Yen, sideways motion at the moment. Remember that it has hit this level, and in the past, once it drops below that, it goes into this intervention. So the Japanese are obviously trying to weaken their currency. They would love to do that. They'd love to weaken their currency to against the US dollar to help their export market. And when it gets to this, they have to intervene, which is incredibly expensive for them to do that. And the economy is hurting because of the high expenses. But it's much easier for someone to, it's much easier for your country to spend your currency to bring it down, as opposed to trying to pull it back into profitability. So because their currency is getting stronger and stronger, they just have to keep selling it. But it is costly. It's not great for them. So it's not really tradable. If there's an intervention, there'll be a spike of this kind of a magnitude or that kind of a magnitude. So you could look at the idea of maintaining an order above that for over a certain number of pips, because they could intervene now, or they could intervene in a month's time. So I've drawn a trend line in here. Let's see which of these trend lines actually holds. This one is now no longer relevant, but this trend line could hold. Let's see if it holds, and if it breaks through down here, then you've got some kind of a, but just be aware of that. It's not going to be a great thing to trade. You just be aware of that. Aussie dollar. Aussie dollar is still looking bullish at this point in time. It's broken the recent high. You know, I kind of want to keep trading it long as it keeps going there. But there is a possibility, you know, that even the Aussies get to a point where they like it closer to the 1 level. They prefer that parity between a 1-to-1 to the US dollar. So they may be inclined to want to sell it, but it still looks like it's bullish. And until it really gives you a clear sign that it's no longer bullish, you should just keep selling it. So not seeing too many reasons for that, but I am worried, especially because it broke this recent level. I'm inclined to think it's if that support level, now that it's broken that resistance, that if that support level holds, which is in fact, is it there? If that holds, I'd love to see if it will be able to hold and then go longer. And then you've got another level up here, so you've got room to go. Kiwi, interesting. Kiwi was ranging for a while. It was ranging between these two levels, and something like that. Again, like I said, I'm shocking at drawing lines in on bars. I can't see it. This has been broken, so that downward trend has been broken. Then it went sideways, and it appears to be of going sideways. There was a false breakout over here, and it reversed and went that way. It's leaning towards the bullish side, but it's not liking it. It's not doing it in a happy, comfortable way. And of course, it's ranged here before, and it's ranged up there. So we could just be hitting an area of ranging, followed by another area of ranging on Kiwi. So be aware of those kinds of things. So trading Kiwi, of the two, I'd probably just trade Aussie. In fact, I'm inclined to think that the Kiwi is what's bringing the noise into the Aussie-Kiwi pair. CAD is cycling downwards, also hitting chaos here. So we've just got a lot of crap happening at the moment. And then it's heading, it tends to range. It's not an ideal one, but if there's a good setup and you see it, take it. And just having a look at some of the crosses, again, still trending downwards. Looks like we're doing a pullback up to the 50 moving average. Let's see if that's the case. And also, that's a support resistance area. So you can see there's some possible reason, if you get a nice high test of that, that potentially we take the short. That's also heading into the oversold thing. Let's see if we get some divergence there. What I would be looking for is to see on this chart a high, and then looking to see something like a lower low somewhere here, and then look at an opportunity to sell, to go short. But I'm not seeing that at the moment. Euro Swissy is locked at the hips, so whatever the one does, the other must do. Euro Yen is, because of that intervention, is not hitting any new levels. Not great, not ideal. Euro Aussie, again, looks as though with the with all the crap going on at the moment, with lack of decision, what may just happen, hypothetically, it's possible, is that the Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, the Pound Swissy, the Aussie Swissy pairs, so in other words, the Kiwi pairs, the Kiwi pairs, the Swissy pairs, and the Aussie pairs will continue to just tick along while everything else is kind of indecisive. So we'll see what happens. We seem to have hit a level here, and we have got divergence. So how much stock to hold in this, I'm not entirely sure, but we appear to have strong divergence in this and a hook, which implies Euro Aussie is likely to do a pullback. So just something to keep in mind. Think about that. Euro Kiwi still going strong. Euro CAD is similar to Euro Cable. Seems to be kind of noise, but trending down. It's broken out of this and working on its way down. Let's see if that happens. And we've got some divergence there, so let's see what happens. Pound Swissy looks to just be climbing up, ticking over. So I guess what I'm saying is until they really give you a clear thing, I would rather that you trade. The stuff that's trending the best is the stuff I would rather recommend that you look at. You know, like Pound Yen is crap. You can't trade this. It's going sideways. So it was going down, then it pulled back, and it's going sideways, and so that's not looking great. Pound Aussie, on the other hand, is trending down. So it's overdue for a pullback, admittedly. But, you know, guys, look for income generators. We'll go have a look at the income generators to go short on this afterwards. Pound Kiwi, you know, same thing. Looking to go short there. Pound CAD, ranging sideways. In fact, it appears to have hit this level before. So I don't really know if this is going to reverse. It could reverse here. It could reverse there. In the past, it's done that. So we have a possibility for this to bounce and go long. Not lots of cash in that, but we'll see. Aussie Kiwi, again, very choppy, and I think that's what the Kiwi brings in. But we have a low, a high, a high, low, a new high. So we could have some kind of a cycle going on there. Aussie Swissy is making money. This is quite tradable. There we go. Look at that. Really nice strong trend running upwards. It's coming back into the buy zone, so you can look to buy it at points here and maybe go up. Buy zone being maybe looking for a low test here or something, and then put an entry above the high of that and then trade it up. Aussie Yen. So the Yen pair is not great. There's a slow upward movement here. It's more bullish than bearish, but it's not great. It's not really moving very strong. Aussie CAD. Aussie CAD is looking more bullish than anything else, and it's coming up against. This is something to watch because CAD pairs tend to range. So what you'll want to look for over here is to see where are those key levels where you've seen price react in the past. Something like that. We've just broken out of that, and that leaves us up with our next level, which is approximately there, maybe even there somewhere. And so look at that. But you've got sort of small bullishness happening there than normal. Kiwi Swissy is making money as well. It's trending upwards. Nice strong trend upwards. Just bounce back, low test, beautiful, beautiful low test there. Low test there, gone long, and is today the 5th? Yeah, today's the 5th. This is not really the current bar. It's not there yet. The market hasn't opened just yet. And yeah, and so look at potentially wait for a pullback to the 10-day moving average and go long on that. Kiwi Yen, not great, still ranging, just doesn't look that awesome. Kiwi CAD, very similar. Swiss Yen, trending downwards, and then has moved into current price action where it's going right now, so I'd watch out for that one. CAD Swissy, same as it's an inverse of EuroCad, I beg your pardon. CAD Swissy, EuroCad, because of the Euro Swissy relationship. This is an inverse of that. So trade one or two of those, make that decision. And CAD Yen, sideways. Nothing to trade here, people. Unless you're doing snapbacks, these kind of things are just really not worth your while. It's too choppy. So have a look at the income generators, and then I'll wrap up. So again, aside from the weekly chart, which I'm always encouraging people to look at for those levels, let's go have a look at what's happening with the income generators. 10 and 20, let's bring that up in the 50. Let's do that. So Euro, yeah, I'm still short in this Euro one with a 100 pip stop, and it was ridiculous how close this moved up to that. 100 pips from, it was actually 100 pips from this bar, and I think it came within, this move on Thursday last week came within 4 or 5 pips of that stop. So I checked both ETX and FXEM's charts, and neither of them came near that, and I wasn't stopped out. But it wouldn't surprise me if somebody did get stopped out, especially with ETX, because I always get the feeling they did. And if you did, you should go and fight them on it, because their charts don't show that at all. So go and see if you can get kicked back into the trade and rather get stopped out legitimately. Ranging on cables, so you can't trade income generators on this chart anyway. Yen, I'd be very cautious of taking anything here. It's really just not the best chart to be doing it on. The Swiss is going to be the inversion of Euro, so we'll leave that. Aussie, we'll go see if there's a good setup here, for example. Oops, let's take this down to the bottom. Yeah, there's nothing here happening right now, but this week I'd be looking for longs. Just what I was saying about high tests. We're getting high test, and it's just disregarding that, which is normally a sign of either indecision or bullishness. It's a sign of bullishness if you get one high test and price just moves beyond that and keeps going up. It's a massive sign of indecision if you don't get that actual breakaway. So right now we're not really getting that. CAD, go have a look. Income generators, again, with this kind of thing, you really have to have that wide stop, because the worst part is it'll trigger you and you'll be in profit, and then it'll kind of like pull back and hit your stop and you just lose. So just something about potentially taking profit on that when you're 2 or 3 days in and you have profits. And let's just pull out further again. Yeah, this is a possible short on this. Yeah, you can put your entry below. Euro cable looks good. Euro yen. Yeah, it's alright. It's just that general yen chart just doesn't look great. Euro Aussie. Sure, if we get a pullback now, we should be getting some sell signs over here potentially to look at that. If you're not still in from this one, you might get a high test or something up off the 20 and look at taking that. So keep an eye on those. High tests are are a great opportunity. If that high test coincides with a moving average or is close to a moving average, that's often a good sign. And if there's a sell signal on that, go for it. So nothing over here, but these kind of things, remember that you can do all those pivot trades and snipers in between these things. So if this is the kind of chart that really moves, of course you can get updates here, you can get that. But generally it's moving shortwards, so it's moving downwards. So you can go for snipers and pivots on those as well. Sideways on this chart, guys, don't go for that. Pound Swissy. Price coming back to test this, so yes, there's a possibility to go long on that if that holds, if you get a low test or something. Pound CAD, not great. Too choppy, guys. There's not enough money in this. We're looking for charts that move for several days in our favor. So we're looking more for stuff like this. Stuff that really has gaps between the signals moving in that way. I don't want you to take every signal that gets generated. They're not always that great. There we go. There's a move. This is looking good. Wait for a pullback. This looks good. We've just broken through this level kind of here. Will we get a retest with a sell signal on that? Yeah, that could be good. Maybe on Tuesday or Wednesday. Keep an eye on that one. Pound Kiwi. Nope, not great. Don't forget, guys. We've got these dud bars over here. For some reason, it's e-signals producing a separate bar. It's just the data thing. It'll refresh tonight. I'll probably get different data. Going sideways. So before the envelopes even come on, I'm looking at the bars. I'm going, it's not the right chart. QB Swissy, yeah, look at that. So I'm looking for this chart. Okay, no setup right now. If anyone's wondering, yes, you can put these orders on a Friday, but if you can put them on a Sunday, that's probably better, because then in case there's an earthquake or something, or something drastic happens, a war breaks out on the weekend, you're not stuck in a trade. So if you are able to, rather just put the order on Sunday night after the market is opened, so that you get a few hours of where the spreads are crazy and markets trigger. Rather wait till 10 or 11 o'clock. So we're waiting for a buy signal here. Let's see where we have that possibility of price turning around. I don't think I see anything here. And just trade these things as long as they go. They can obviously turn around at some point, but until then, just keep trading them long. So that's it. If I get a chance to update later in the week, I will. I just, the income generators are the first end of day strategy that beginner traders are taught, so I always recommend them. But on the charts that are really trending nicely, you can trade pivots, you can trade snipers. And then, there's things like reversal trades, and there are some more advanced strategies, 20 pounds and a few other things that make a lot of money. Yeah, but I try to keep it really simple, because a lot of the people that I coach have only done the one course and are not necessarily master traders yet. So that's why I just focus on just the basic stuff. I don't want to distract people and have them changing horses mid-race. So I want to get you guys profitable on certain strategies as soon as possible. That's it for now. So listen, happy trading this week. Let's have a quick look at the news to see if there is anything that might zap us. Bernanke speaking on tomorrow, which, yeah, that can cause a bit of a move, so that'll move the euro and cable, so be aware of that. So that'll happen probably any time from 2 till 3. And let's see here, we've got, there he speaks again, so that's a bit painful. This is interesting, just to see if they're going to keep the interest rates the same or what they're going to do. Let's see if anything happens there. Trade balance, unemployment claims, yeah, maybe. Who knows? These days, you don't know if you're going to get a blip or nothing. That's it. And then this would normally have been something, but doesn't mean anything right now. This might have an effect. Yeah, keep an eye on some of these things to move the Aussie dollar. Monetary policy, yeah, that could make a difference. Chinese yuan is able to possibly do something here. Yeah, maybe we'll get some move on the Australian dollars, and of course they always happen in the middle of the night, so that's something to think about. If before you go to bed, if you're in profit, consider moving your stop or closing out the trade. It's possible. We've had this kind of thing happen before, so be prepared for those sorts of things to happen. Yeah, that's it. These days you've got to take your profit as soon as you can get it. And at the same time, if you have a really wide stop, you've got to be prepared to let things run. So you have to have two strategies. One is short-term stuff where you take profits. The other is you have a wide stop which allows for the volatility, and then you just let it run. You just got to let it go. So, and ideally you have a mixture of both. You should really be doing both end-of-day stuff, longer-term stuff, and short intraday stuff, just to keep your portfolio balanced. and you can do it on the same charts. It doesn't really matter, but you're it's, and then not risk more than that 1%, 0.5% on one trade, maybe 0.5% or 1% on another. If you're doing 0.5% of the end of day trade, you could do 1% on your intraday trade. As soon as you're in and out of that trade and you've banked that money, you should just do it. And I know with this kind of volatility, you can get triggered in and out, which is painful. But overall, you'll see that the trend is probably still, you can read that and see how the charts are analyzed. It'll probably go that way. All right, guys. Sorry. Enjoy the rest of your Sunday. I'll post this up on the Facebook group, Paul Bottrell's Trader Talk page. I'll post it up there first because I'll send it out from my Monday morning email from my desk with my signature on, which I can't do from home. So I'll do that, and so you guys will get this first thing Monday morning. Oh, let's have one more thing. I forgot to look at the stock market. I beg your pardon. Let's have a very quick look at just very briefly at what the markets are doing. I can't believe I forgot that. So we'll have a look just at the top five, the big five. This is the S&P going bullish, nice and long, high highs, high lows. That's still looking good. The FTSE is, there we go, brand new high, still bullish, looking good, guys. Oh, and just while we're on that, pay attention here. It's amazing how price reacts with breaking this trend line, comes back to retest it and turns on it. So this grey trend line comes down. Price was fighting for that, broke through it, came back down, tested it and reversed. Just interesting to see how trend lines make that. Even though it was bouncing on this trend line as well, you can just see how it interacts with those lines. So that works really, really well. So that's still bullish. That's fabulous. This is still doing new highs, high lows, so still bullish on that. Nasdaq is still bullish, broke into a brand new high, guys. So that's still, it's not doing a lot, but it is more bullish. Okay, so it seems to me that people are moving their money into these kind of things. And the Russell is the only one that's going sideways. So what's going to happen if the rest of them continue to go up? This is eventually going to break up, and it's really going to move. It's going to catch up with the rest of them. I'm curious. I don't know why that's happening. If I find out, I'll let you know. That's it. And interesting that the FTSE has followed suit. So that leaves 4 out of the 5. And the FTSE is normally the weakest of the bunch. So interesting this has now followed through on that. So I'm inclined to be bullish on these things until such time as we see any reason not to do that. Alright guys, I'll leave it now. Have a good weekend. I'll chat to you next week.